Hey guys, welcome back. You're still watching Power Breakfast. Now, before the break, we were just talking about how the FOMC minutes sound quite hawkish, but that's not all. In fact, inflation worries dominated the last monetary policy meeting of the MPC as well. So according to the minutes of the meeting, the RBI governor and the RBI members sound more hawkish on inflation than the external members. One external member, that's Jayant Verma, says that the MPC stance of withdrawal of accommodation is confusing. Lata is here with more on the minutes and what really it could mean for future policy decisions. Listen in.
Well, one key takeaway clearly is that the Reserve Bank's members in the MPC sound a little more concerned about inflation than the external members. The governor in particular clearly saying that now once they move within the 2 to 6% band, they should start moving towards 4. So that clearly sounds they are more concerned about inflation and its second round impact on inflation expectation. Among the external members, Dr. Verma's dissent to the accommodative removal of accommodation stance seems to be more a dovish dissent, but he clarified that he dissented more because the stance sounded confusing to him. In fact, he seems to be rooting for more clarity by asking the members to vote on a dot chart like the FOMC, which other members were not agreeable. A third takeaway is that Ashima Goyal seems way more confident about the growth part, saying that even exports may not be hurt so much by recession. However, Dr. Shashanka Bhide, the main takeaway seems to be that he has some concerns on growth, that exports could be affected by recession, and some concerns on inflation because a lower Kharif can continue to impact inflation. The net from the minutes, one can only say that we are not any the wiser that we were after the August 8th policy statement. It does look like one more hike in October is definitely on the cards because the Reserve Bank will have to write a letter to Parliament explaining why it failed in achieving a sub 6% CPI for 3 quarters in a row. So a hike definitely looks on the cards in October, but that is exactly what we thought at the end of the August 8th policy statement itself. The minutes are not going to change the market's mind on anything. They will continue to expect a few rate hikes, definitely one in October, but nobody expects that the Reserve Bank will go on hiking all the way till 6.5% or 7%. So it really is a reiteration of the status quo after the August 8th policy.